So I'd like to start off with your view earlier in the year. So could you remind us like what your outlook was back then and how, if any, has the technical outlook changed since then?
All right. Just give me a second to write my slides. All right. Charles, can I just check? Can you see the slides on my screen?
Yes, you can see it.
All right. All right. So we'll begin really with what we were looking at last time we met in the beginning of the year. If you can see that the slides you have in front of you, the chart of the PSEI back in January, we were having a very, very nice swing upwards. That generated quite a lot of positive sentiment, and everybody was really becoming quite bullish already. And during that time, if you notice the statement I put on top there was roughly what I was looking at. And I was saying that the PSE is on track to be able to follow its 2019 swing, but that January could actually lead up into a corrective consolidation. And if you were to look at what happened after that, and this is where we are roughly since then and today, and it seems to have lined up fairly well to what my expectation was. We went to a correction, then we started to consolidate, and we're currently inside that consolidation today. So I'm still quite hopeful, though, that that we may be able to punch through this consolidation sometime in the second half. I hope it's sooner rather than later, and continue to align itself with the target that I had in mind, roughly closer to 7.5, but that'd be a range between 7.1 and 7,500. Now, if you were to look at these charts that I have here, so I told you it was following track with the 2019 situation. And if you were to look at the chart on top, this is the 2019 chart of the PSEI. And at the time, I was already drawing out what happened then and potentially what happens after that, which is this one you see on the right side. And I've drawn up the Philippine situation here below to be able to reflect pretty much the same thing. If you notice the red line sign winding downwards, and then after finding a bit of a base in the second part of this, then a rally comes off. And that's what I'm hoping that we could still see attempt to be able to show off towards the second half of the year. And that could be quite an opening for some traders in order for it to be able to target next resistance. After 6,750, that would be something closer to 7,100. Now, another thing to be able to add to my context of why I'm keeping myself quite optimistic really is because I'm trying to be able to follow it on an Elliott wave cycle. And last time I actually showed these two charts as well, except for the one on the right side, which is a bit more fresh. And you've noticed that it's managed to be able to make a higher low back here on the wave 5 that it did, and we call this a truncated or short-end wave 5, which is supposed to be a bullish signal because it shows you it doesn't want to go all the way back down to the low that it did in 2020. And hopefully it just has to park here a little bit while longer before attempting to be able to wrestle itself upwards. In the shorter term Elliott cast, you would see that an ABC could have also been completed, although I may have to be able to factor in some risk. I'll show you a slide later that may have to be able to deal with that a little extension of a bearish situation just in case we do it. But if things prove to be quite good, as I'm expecting, we may just park here for a while and hopefully we can break above this area here, and that should be able to give us back some leeway into a rally space. Now, I'd like to go back to a chart. I think April showed this earlier to you. See, I told you April's starting to turn into a technician as well. And the good thing about this particular chart really is it helps us try to identify where we are in the cycle of things. This is called a bull and bear cycle map. And inside this map, you should be able to try to pinpoint where are you so that you can identify the range in that area so that you can adjust what your strategy to the market will be. The important question here is to ask, what do you sense in today's sentiment? What are people feeling around you? That way you can locate yourself somewhere into this map. So you ask yourself, there's two positions which we could actually be in, because there are two major bottoms inside a major bear market. The first one is this one. But this bottom here normally is generated by panic coming right after people are being quite fearful of the market. I don't seem to be sensing any conditions of desperation right now. And I would agree also with April that I think we are in this segment of that bearish map. And given so, I can see the no interest. There's a lot of pessimism. People still talking about recession. People still talking about slowdown because of high interest rates. People are doubtful of what the equities market can do for them. So it seems to align very well to this condition we have here. Now, but the reason why this is important is remember this. If this map is a cycle, the end of this is the beginning of this, what you have on the left side. And that means the end of a bear market would line up with the beginning of a bull market. And so keep that in mind when you're looking at the way things are right now. So you should really be looking to gradually position yourself already into the next swing activity, because I think majority of the bearish trend has already been factored in with the market. And that's something that a lot of people have to be able to consider.
Okay. So Juanis, correct me if I'm wrong. So basically what you're saying is that despite the general market weakness over the past 6 months, which has left investors feeling a lack of interest, you're saying that it's still setting up, the Philippines still setting up for that bottoming out process, or that reversal process that you've mentioned as early as January this year. Is that correct, sir?
Yes, sir. That's correct, Charles, because bottoming out is not something you do in a day. Right, you have to be able to build a good foundation of accumulated interest into the market. Now, it cannot run away from us because, like April pointed out, there are a lot of headwinds still there. Interest rates are still relatively high. That is a direct competitor to our equities market. So as long as rates stay high and we still have some headwinds and potential recession, perhaps in the US, people are not going to be all out aggressive. But what they will do is they will take advantage of that short-term situation, capitalize on that opportunity today, because prices are not going to be here too long.
All right. Okay, very clear. So in the earlier discussion with April, so we talked about the importance of the global markets, even the interest rates, global interest rates, and the dollar on the PSEI. So could you share your views on these global factors?
All right, sure. So I think it's necessary to point out that we pointed this trend out back in January, that we said that inflation levels are starting to taper. That was very clear in the US at that time, not yet in the Philippines. But clearly, as of several months down the road, I think where you can see in the inflation chart in the Philippines, we're pointing quite well on the downside with the last 5.4%. The US doing something like almost 3% in their last tag. So I'm still seeing a clear evidence that inflation is very much already under control. Although I think some central banks still want to make sure that we're not going to see any sudden surprises in this later. And that's a reason why they don't want to turn rates around. And they're going to probably just keep it where it is for the meantime until they can make themselves sure that inflation is controlled. In fact, when you look at the chart here on the right side, I'm showing you US bond yields as compared to Philippine bond yields in the bottom. Just recently, we had a little bit of an uptick into the bond yield market in the US and even the Philippines. And that was a bit worrisome, and that caused some volatility in both our markets, because there was a play again that the US may still raise rates maybe one or two more times before the year ends. Although I think that could just be posturing. Yields right now, they did make a rally, but they fell back right away. So I think I would only get worried if I see yields climb back up maybe above 4.10%. That would probably be something I don't think the market had factored in yet. But right now, it seems to have cut down on its brief rally. The Philippine scenario, the same. Yields have also gone from 675 back down to 628. So again, it seems to be quite well taken care of in terms of any risk threat from that going up. So I think this would be quite contributory to the fact that it should put some added bullish back into our market gradually. In terms of the dollar and the peso, just recently also we saw that the dollar broke down from an area pattern. That means significant weakness into the dollar. And although I think it fell down a bit too fast, I think it could use a little bit of a rally, maybe rally closer to maybe 101.50 or 102 on the DXY. But I don't think this would go all the way back up here. I think it will just make maybe a half distance recovery and stay generally weaker. And if you were to look at the peso dollar here on the right side, we also had a breakdown on this particular event showing you that the peso did become stronger. And right now, it could also have a little bit of rally, maybe seeing resistance between 55 and 55.30. But maybe after that, maybe just keep itself relatively strong and inside this consolidation band above S1 or above S2. So I would picture that also as a bullish call for us because the attractiveness of your currency should be able to help keep investment amounts in well placed into our market. Now, I'll go a little bit in the US because I think right now, to me, this is about the only significant risk that I would see, excuse me, as an interim condition, but I am quite bullish on the US. And the reason for that is, again, I'm also using a template that I borrowed also in history. This was what we call the dot-com bust. And during this particular market, it went through a heavy corrective phase for a few years and then punched out, and then it just went up, up and away. And just recently, this is the S&P currently in the bottom. You could see a relatively close affinity to what you see above. And it also went through a breakout condition of the downtrend it's had for about a year. And then just strike up. Momentum seems to be quite strong on the way up. However, we are dealing with some overbought conditions. So although a market can be overbought, that doesn't mean that it's finished and it will not climb anymore. All it has to do is fix the overbought condition by maybe parking sideways or maybe retracing a little bit, going back to a level that seems to be a little bit more supported in price, and then it can resuscitate its advance. And so far, I see no topping out conditions being shown to me on the technicals. In fact, a position in terms of correction could be something similar to what you saw here. It could just consolidate a little bit on the downside, pull back a bit, maybe 5-7%, and then after that you might be able to see it resuscitate itself. So I would still see this as another bullish call later on after the correction is done also for other markets. And if you were to look at the situation from other markets as well, I would say a generous amount of other markets are also doing fairly well. I mean, Europe is on the way up, although yes, it could do a little bit of a correction. So is France, Spain, and England, the same condition. If you were to look Japan was one of the strongest markets we've also seen, including markets like India. And of course, here in the upper right-hand side, you have Indonesia, which also looks relatively well after correcting, managed to be able to jump up inside. And India, South Korea, Taiwan, and Singapore are also aligned with that type of relatively stronger formation. And those that are relatively trying to get out of this bout of weakness are obviously China, which is one of the weaker ones. Philippines, I'd still put this in here because we're still in consolidation, and others like Hong Kong, Thailand, and Malaysia. But one thing is I can see that some of these, even here in the bottom ones, are already trying to work themselves higher. So I guess the only ones I see under threat right now is China, maybe Hong Kong, Thailand. The rest look relatively good to me. So I don't really see too much threat, except for just in case China does something wayward into a downside because of the economic struggles that it currently has. And finally, in terms of commodities, I guess I would add some tempering here, because in terms of commodities, gold prices corrected from the very, very strong movement. Even with the dollar falling down the way it is, gold only managed to rally a little bit. So it's not showing too much instability with how currencies are going to be showing. So that's good. Second, if you look at oil prices here in the bottom, it's trying to make a recovery because of the weakness we're seeing into the dollar. But I think it might be capped. I don't think that it will probably break above 80 or 84 as a potential rally for oil. So I think it probably stay below that area, given it's still into a downtrend. If you were to look at the charts of nickel and coal, though, a little upsetting, because it shows us that the state of demand for these commodities are still not very good. So I don't see this being a benefit, because that's kind of telling that people are probably quite defensive into these particular things for the meantime. So but other than that, I don't see any negative things that might affect us too heavily, that might condition us to continue on downwards, except, of course, maybe a lingering of rates going higher. And if, let's say, a situation that Abe was talking about, and that if we do see some sort of recession and something that could be something more than what many of people are expecting, that's about the only surprise that we may have to deal with.
Okay, so Juanis, in light of those risks that you just mentioned now, no, so how would you reconcile that or translate that to the local market, right? To your views on the local market.
Okay, so let's try to put that together. So in terms of the US technicals, it's still strong, but they're stretched. So all we're talking about is maybe short-term correction for the US. So not so bad. In terms of yields and interest rates, okay, I mean, right now, admittedly, that is the headwind, right? We're seeing rates may stay high longer, and that is a direct competitor to us. And because of that, I think right now that's going to be a situation that we have to keep our eye on. If that does not adjust downwards soon, it might have its potential effect into the economy, and that might be a headwind that might throw us into whack. In terms of the dollar peso, it looks favorable to us, so I would see more bullishness in that. That's why I mark it off as a green. And in terms of commodities, I would say neutral. Some are okay, some are not, but I don't see too heavy threats right now. So in terms of these things affecting the Philippine market, if you were to look at the Philippine technicals, they're better than what they were a couple of months ago. That's a first good signal I've seen. They did not break support in the last attempt to try to do that. We were on the verge of doing it, but we managed to rally. Second good signal. The third signal we need to see is a breakout over 6,750. Until that happens, we're sideways. So right now, I'll stay neutral until that fact takes place. But if that fact hopefully is around the corner, then I think I would see a bit more intensified action into the local market.
All right. So Juanis, you mentioned a while ago that you are on the optimistic side,
yeah.
But is there a risk on the other side, naman? What's the likelihood of that happening?
Yeah, okay. So anyway, I have a prepared slide for that because I had a lot of people asking me about the potential of this happening, just in case something, a monkey wrench is thrown in and disrupts things. So let's look at things the way they are today. So here's an example of what the index looks like. We're stuck in a sideways range. What I'm looking for potentially is this. I'm seeing that after an ABC scenario, which is an Elliott corrective wave, a truncated one, a shortened one, that tells you that resilience in the markets here and that the potential for it to recover may be there. This might be able to push us over the 6,750 and target the next level of 7,1, hopefully a little bit more. And I think that we probably have greater chances of seeing this into the short term coming towards this second half. Okay, so what happens if the Fed comes up, starts to talk up their nature that, no, I'm still going to raise rates one more time, maybe even one, maybe two more times. Or let's say that inflation starts to pick up and that, again, throws people into the defensive, then that means that certain things can happen. Or let's say there's an escalation of conflict somewhere that can threaten supply problems and re-escalate inflation as well. So the scenario for that would be that instead of seeing an ABC here end, you might be seeing that this could be the A wave, this entire consolidation be a B wave, and then one more final correction wave as a C, and that be the end of everything. And after that, the market comes out, creates a base, and manages to be able to recoup already from that consolidation. But if I were to put, let's say, a percentage chance, I'd say 80% chance of scenario one here and 20% chance of scenario two as a potential. But one thing I'd like everybody to be able to keep their eye on, aside from that bull bear market chart that we showed earlier on, is you have to understand where are you closer to making a market high or are you closer to making a market low? You have to ask that question because as you're going to be positioning yourself into this, you have to know, should I be looking to hold my positions already or pick up more little by little as things reinforce themselves? Or should I just continue to unload because you think that there could be immense downside yet? I don't think that second situation is up because we today are in a bear market heading towards a market bottom, if not already. And given that context, this is the PSEI chart that I've shown you since 1987. Every time we have a market bottom inside, the market has always managed to be able to make a rally back and make a new high given that condition. Here, another bear market, made a low here, rallied back, went higher than the previous high. Another bear swing here, went up really, really strongly back to 8,800. And now hopefully seeing this cup-like situation, whatever we see as a bottoming out area, I think later on we'll see the market come back and beat that 8,800 high. So I think that itself is good reason for us to prepare to position into this market as we come and see the tail end of this bear market come out and fulfill itself.
All right, so definitely some some exciting things that you said there. I'm sure some of our audience got excited about the 80%, 80-20, the 80-20 probability. So that's definitely exciting for me. So having said that, Juanis, what would your advice be for traders?
Okay. In terms of traders, let's look at it this way. There's two positions here. I want you to be a hunter and gatherer at this stage. And the reason that means I don't want you to just go buy anything. You have to still be quite selective. Remember, we're stuck in a range. Given a range, you're going to see some issues rallying. You're going to see some issues continuing to go down because that's what happens. That's what creates a sideways push. So as long as our index stays above 64, 63, 30 support, I think it's okay for you to be able to look for your favorite stocks, see if they're holding above key levels, particularly if you can see that they're already climbing over your 100-day EMA. I think those are all good signals that they've established good levels of support and that the potential for them to rally are already very much in place. The reason I want you to be selective, I think April also pointed this out earlier, is because we're coming from a situation where a market has no activity, no interest, low volumes. And in such cases, you cannot afford to chase prices up. So I want you to buy them as they pull themselves off support. That is very important. Because if you chase a rally, fizzles out, it could take a long time before you'd see them come back, and that might threaten your ability to stay there. So it has to be very selective, and you have to be very considerate with what you're doing. You have to be a stock picker here. 6,750 is the range to break. So if that starts to break, I think you can increase your intensification process here. You can widen your berth in terms of the issues. I would look for pullbacks from support right now from stronger stocks, those that are on uptrends above the 100-day EMAs. You could also do some range trading if the patterns are wide, but if they're very thin, I think you just stay away and just wait for breakouts to take place from them later. You can try what is known as a mean reversion trade. That means if a stock price falls down very, very sharply, and this is one of the popular issues, well traded, the minute you see them in oversold conditions, you can try buying that so that they can try to rally back to the next resistance. That's a potential trade. And the third one is a bit more patient. If you see companies that are falling down to major lows, they're making consolidation bases, and breakouts from these bases could be an opportunity for you guys to buy that for a worthy rally back into the next resistance as well. I can talk a little bit more about some of those demonstrations of those patterns later when we start showing some of the issues that I'm keeping watch of. But again, keep note that markets they could run up only for a while because the volumes are thin, and this can continue to be a market risk because momentum in the market is very, very light, if at all anyway. So please don't chase prices.
All right, I think that's clear. So Juanis, could you share some of the sectors that you prefer and maybe even the specific trading setups that you think traders should be looking at?
Okay. So in terms of the sectors, I think it's very clear. It's no doubt that the banking sector is the strongest. It was the first to rally. It stayed up there. It hardly makes any correction. So clearly the demand is flowing in that direction. The market feels quite secure there. That tells me there will be continued action into that sector. So I think there should be bank positions into your portfolio. The only thing is wait for prices to come down, especially because in the last few days, we've had some intensification moves. Like I said, don't chase the price, so wait for them to come back to support before you buy them. Then there are holdings and commercial companies as a sector that also look decent. Services selectively, not all of them. So I would think that's why I color them in orange, because that's relatively neutral. You'll probably see pockets of activity there, not as clear as the banking sector. But in these particular things, I think you can make some selective movements. Later, when I discuss certain picks, I would show you how to be able to tell a strong one compared to a neutral one, and compared to those that are just trying to bottom out, and what you have to do for each one of those things. Now, the weakest are obviously the property and the mining sectors. Right now, I guess they're waiting for more catalysts to be able to come out. In terms of property, I feel that high interest rates are very much a direct competitor to its ability to generate better business. And I think April pointed out that it's only really if we see the potential for rates to start to subside that perhaps there could be some movement back into this sector, but it might be a laggard. In terms of mining, right now, since demand is still relatively questionable, they're going to correction. I haven't seen it base just yet. There could be a rally in oil, but that's so much all what I see so far. So I think rallies into this sector will also be tapered and limited. So maybe sell first into a rally for these ones, and then maybe buy it when it comes back down to support, at least for the sectoral conditions. Okay, Charles.
For the trading setup, sir.
Oh, okay. So I would break my setups into three categories. Primarily the first one for the stronger trend issues. So when you see stocks that are already trading over their 100-day moving average, these are the categories, and this is what you're should be doing given this context. So here you might be able to see some pocket price surges push up, because you can see there's already been intensification. But wait for pullbacks to the 20 or 50-day moving average before you start picking this up. I would like it better if you see that MACDs are cooperating, that they're no longer negative and they're pointing upwards. This is one way for you to filter that your stock has better momentum, and it'll probably have more lasting power into the upside. I should feel quite confident buying these on pullbacks, because that would just be temporary setbacks and you'll probably get them moving up. So I'll give you some examples of this when I show some stock prices later. And I would also agree with April. She said take some profits into those rallies. Yes, I think you should do that. But when I say take some profits, don't sell all, right? I'd like you to keep yourself positioned, because we're coming from a basing maneuver here. So you just sell a part of what you have, and in whatever you raise as a proceed on that sale, you're going to look to buy that back into the dips, into support. And here you might be able to have some breakouts that could have some few days follow through. The problem here is some others that are weak. You see a breakout, it breaks out for one day, goes back into the pattern, and that's very typical into a bear market. So you can only follow breakouts on stronger trending stocks. So don't apply that to everything that breaks out. Second, you might have the ability for range trades into those that are in clear area patterns. Or if you see, like I said earlier, you see a sudden drop, it goes to an oversold level, you might want to buy that for a counter rally swing. That's one way for you to also make money into this kind of situations. Now, mind you, as I go to the right, in terms of the formations involved, it becomes harder and harder because you're trading against the trend. On the right side, we're talking about buying stocks in a downtrend still, so it might be very difficult. But for those in ranges, it's a quick buy, a quick sell, right? You're range trading items that have clear support and resistance areas. Sometimes the rallies here may not go all the way up to the high. It might go only a midway to the high. And that's common also, because remember, the market is weak and still trying to be able to regain its footing. So oversold conditions you can take advantage of, but remember, you're buying that quickly and you're selling it right away. Here, breakouts often fail, because remember, they're ranged. So it might seem to break out, next thing you know, they're back into the pattern within 1 or 2 days. So that's a common instance for especially these types. Finally, we have those that are the issues that have been falling down for a while. Now, I know a lot of people say, wow, they fell down so much already. It looks like so cheap. Why don't we go ahead and buy? Yes, that could be an argument. But remember, it could take 1 or 2 or 3 successive lows before that situation will allow it to make the rally that you're talking about. So to try to put some safeguard here, wait for patterns to form. So it'll fall down, then they'll generate a consolidation sideways, and inside that consolidation, you see them uptick from there, then you can pick it up. At least you know that there's substantial support given the fact that they've generated the pattern. So these are the basing attempts that you can try to buy into these declines. But again, like I said, just remember, if I were to allocate my volumes and trading capacities here, majority will be on the first one, maybe with the second one being the next. The third one, I will control how much activity I will put into this. And this is the way I think the trading styles will still be in a very much mixed market.
Okay, thank you, sir. Also, I really like this slide because this really emphasizes the need for for the rules, for the discipline, especially when given today's market environment. So despite Juanis's optimism, again, there's still some headwinds, guys, and we still need to exercise discipline and caution and selectiveness whenever we're doing our trading. Right? So I guess this is a good parang summary of your view so far, diba, that we've talked about. Okay. Juanis, could you share some of the, can we now go to the specific stocks that or issues that you think have a good setup?
Right. Okay. So we'll go into the slides. I've broken these down as demonstrations of the 3 columns that I presented earlier on. So here, let's start with those that are clearly uptrend buys and our options to look for pullbacks. Here are very, very strong issues that we have. For example, the likes of BDO, Bloomberry, Meralco, and Jollibee. Remember, these are technical points of view. I understand that April just took out Jollibee, perhaps because of the recent stretch in price. So my standing here is, as long as uptrends remain, I will just watch these issues carefully for an opportunity to buy them again. So in the case of BDO, we had a breakout situation, pulled back for a couple of days, pushed back up to a new fresh high. So clearly, the opportunity continues and remains here. But again, since you've gone up 2 or 3 days, again, I would rather wait to buy this on the way down as prices come closer to these supportive areas. If we can even get them back to 135 to 132, I've identified more prime areas to buy. But anything between your 20 and 50 day, or this orange and red line you see here, these are viable areas to be able to enter. Just again, please avoid the chasing of prices, because we're not in that environment that is a runaway just yet. Maybe if your index breaks over 6,750, that could change. Meralco, the same. It's now into a channel. So again, wait for pullbacks. I pulled back the other day. I hope we can just do that a little bit more. For those, like I said, when you can take some profits, do not sell everything. You're in an uptrend. You have to try to stay with that uptrend as long as possible. So when you take some profits, maybe you can take 20 to 30%, maybe maximum 50. And that way you do have some cash to be able to use to be able to buy back when that comes back to our supportive areas. Bloomberry, also very strong, but this could be a beneficiary of the fact that just in case MPI moves to delist, it could be a number 1 or number 2 candidate to be able to swap it into the index. And I think this is the reason why people are playing around with the movements right now, but the technicals still look relatively decent. It just broken through several highs. So hold this or wait for a buy into a pullback, or if you're getting closer to the red line you see up here, that might be take a little profits first and then wait for a buyback later. And the same conditions for Jollibee. I think it's just a bit too extended right now. I drew this red line here because there's a previous high in history. Wait for this to be able to settle down, maybe closer to these areas, 244 to 238. These would be more prime areas for you to buy. In these areas, maybe take a little profits, like I said, 20, 30%, and then just wait for the pullback. So this is what I would put majority of my activity in stocks doing things like this. In this situation, you see all of them are trading above most of their moving average, if not the 100, like I stated earlier on. Now, there are still a lot of issues that are in a side-winding situation. They've not gone back to a new high, or they've flattened into consolidation. I think you can see clear examples of that here. For example, GT Cap still has to be able to target its previous high. Ayala Land, this is an example of a mean reversion after falling down very, very sharply into oversold conditions. Now it's making a counter rally, and I'm thinking it'll encounter resistance maybe closer to about 2750, maybe closer to 2980. There could be some hurdles here, so maybe here take some profit, wait for it to come back down to support, and then look for a potential repurchase there. Also, remember, Ayala Land is a sector that's in the property, so I would be extremely surprised if we're going to see continuing up moves in this. So take advantage of this when you have it. ICT, very clear flat area pattern here, rally to the mid zone area, trying to break out. If it can, then maybe it can probably retarget 220. But maybe if it's up there, take some profits and then wait for prices to come down again. And Manila Water is another example. You can see a channel being involved. It's currently somewhere closer to the mid-zone area. If it punches over 19, then maybe it can retarget the next high band, which is closer to about 2070 or 2080. Again, range trade this particular thing and buy it closer to the support areas that you have between 18, which is the low here, and 17, the low closer to the channel. Okay, now this one's, I recommend this to those who perhaps have a little bit more experience, because remember, you're trying to be able to move in very early to a potential reversal condition. And so you can clearly see some of them are downtrends. There are downtrend lines that are breaking. For example, in Monde, in Globe, you already see that. But in the case of Semirara, DNL, I mean, downtrends are still very much in place. But there are area patterns for us to be quite happy about, because that tells you that they're anchored themselves, just like you see in Monde and just like you see in Globe. So I think there is a potential to make this trade. Again, my volume activity here should be a bit narrow than what I would have in the first two types, but participate nevertheless, because if they do break, they could have an initial surge that will provide you an opportunity to make short-term money here. And who knows, maybe they could intensify later and go to the next phase and become either a sideways or uptrend. And you might as well have some positions on it right now after these major bases inside. So take your cue from the patterns. If they don't have a pattern, you just see a single straight line going down and there are no patterns yet, that means please stay away for the meantime, because they have not been able to groom themselves or anchor themselves well in order to generate a worthy rally for yourself. You might see a little bounce, but it'll be very small, non-lasting, and you might even see them come back to the previous low, if not lower. So please be very careful. Do not trade downtrends unless you can see clear evidence that people have been accumulating them into these patterns. And I think that would be a very important thing to do if you're taking a bit more of these dangerous attempts to buy basing type of formations.
Okay, I know that we're running a little bit behind schedule, but I just need to ask one last thing, Juanis. So
okay, sure.
What happens when we break out of 6,750? What would change?
Yeah, so what changes it? The market might intensify. You'll probably see a little bit more broader number of issues attempt to partake now into the rally. The target zone will be 7,100 to 7,500. So you have some space to make money into that call. But I think more as a optimistic person would be the third sign I was telling you that would confirm that the market's getting ready to bottom. Right, and that means that even if it goes to 7.1 or 7.5 and it backs off from there, that would still be a buying opportunity for us. I hope that would coincide with the US making a correction, so that while we correct, they correct at the same time. And after the US finishes its correction, we finish our correction as well, and we can both start to trend up as well, given that context. But clearly, that is a prime scenario that I would really like to happen, the break of that 6,750.
All right, so thank you for all your insights, Juanis.